Trading is closed on the 18th of October 2023. As always, we'll start with our disclaimer, go over our calls, and make some predictions. It's my trading plan for tomorrow, which is October 19th, 2023. Remember, I can be completely wrong. Any trade you make should be made at your own risk. I had no time to look at the market today, very little time to do my analysis. Anyone risking money on the call should bear that in mind. Look for the pattern today with the early high. Tomorrow should have the early low. Absent the quick move over the high of day, which never occurred, we thought we'd see lower prices, which turned out to be an understatement. This is the early high pattern. Tomorrow has the early low pattern. We crossed the target from October 9th off the list. That's 4304.43. It's not only a target, it's a support resistance area. That support, and so far, support's held pretty much right at the target. Today's patterns generate a new target of 4349.66, and if we don't get down smartly, that's the call for tomorrow. We did get an ultimate sell signal in the afternoon, but that's played out. This whole thing doesn't meet the MEJT sustainability criteria. It says we're going to recover, gives us the target. We do have a volume spike in the futures market. These don't have to occur at the absolute low, but many times there will be at the absolute low. These high volume spikes tend to be evidence of panic selling by retail customers. Well, this is the count I'm using. I'm just not certain this corrective wave is over, because this move here seems to be still countable as a 3-wave structure rather than a 5-wave structure. We have was with question marks either in wave magenta 4 or black 2 of magenta 3, but nothing requires this corrective wave to be over, and it's pretty tough for me to count this as a 5-wave structure. Again, I didn't have as much time as I'd normally like to have, but if that's the right idea, we could consolidate here for a bit longer. Right now we're just to the 50% correction of the recent advance, and that's one of the Fibonacci retracement levels. We have to be on the alert for a reversal coming. I had been using this count. Again, this whole thing looks like 3-wave structures to me and not 5s, and that's why I think the corrective wave might not be over. If this is the right count, we have an A, we have an A, we have an AB, there should be a C, but that would be a black B, implying there's more downside to come, and that certainly could be the right count. But again, once again, it's not the only way to count this. You don't really have to have exact Fibonacci ratios. It's possible to keep the same A we had. This could be an ABC for A. This could be an ABC for B, with C and A having a fib ratio. Blue B would be a 50% retracement of a whole advance from this low. You can easily count 5 waves down in this leg to go along with the higher MEJT target, the volume spike in futures, and the fib retracement. So this has to be a candidate for a low, and even though the fibs don't excite me, they don't have to be present according to Elliott's rules. If this low holds, I think there's a good chance we have a rally here tomorrow. Well, Thursday's pattern has the early low regardless of where we open. There's a higher MEJT target. Unless we gap down smartly, the rules say it prints. My personal business, I didn't have much time at all to do my analysis today. Please bear that in mind if you care to risk money. But if we don't gap down smartly, my call is much higher, 43, 49, 66. It's the pattern with the early low. Doesn't mean you won't gap up. And that's today's call.